Ladies and gentlemen, I will have a live stream on this topic this evening, so be here on this channel. It's going to be around 7:30 p.m. Pacific. This is a story that not many people on YouTube are talking about, especially not many people focused on politics. So, I don't want to be right about this. I haven't been right about everything, but my track record you can compare to CNN or the $20 million venture capital funded socialists. And they're the ones who said Trump worked with Russia, which I told you from day one was a hoax. They're the ones who said Clinton would win in a landslide. I told you she would lose to Trump. I haven't been right about everything. I said that Clinton would replace Biden. Well, we see now that he's one of the worst presidents thus far we've ever had. What's going to take place, I believe, my prediction, I hope is wrong, is that we will have a collapse, a stock market collapse. A stock market collapse that will rival 2008, could be worse. We already had a hedge fund that went under several months back with tens of billions of dollars in losses just for that hedge fund. And you had billions upon billions in losses for investment banks. But I want to read you this. There is absolutely no way to regulate these hedge funds that are over-leveraged, number one. So, firms and hedge funds and banks and individuals are investing on margin. They're borrowing more money than ever before. That's number one. Number two, we had the greatest jobs miss in history of around 700,000 jobs that should have been added to the economy. Okay, number three, we have inflation at a 13-year high. Then you have an all-time high in terms of margin trading. Then you have certain type of risky endeavors that one is called a CFD trading, contracts for difference. We'll get to that. Contracts for difference are a popular way of trading on the price of stocks and indices, commodities, cryptocurrencies without owning the actual stock or investment. So you're trading on the volatility, which is really something that could lead to a catastrophe. That's what these hedge funds are doing. So you can, this is a CNN article I'll put below. Credit Suisse helped Archegos, which is the hedge fund that went under, take potentially catastrophic risks before losing billions when it collapsed. This was just a couple of months ago. Okay? Hit subscribe to this channel right now. Save your money, ladies and gentlemen. Because I think that within the next year, there will be a market collapse that will rival 2008. The reason is because corporate profits will eventually subside, and then you have an economy that's not growing, inflation that's increasing, margin trading that's at an all-time high, and then you have risky trading activity with a hedge fund that already went under, that took banks with them, that regulators can't regulate. They can't stop this. So this is a Financial Times article. Fed warns of hidden leverage lurking in financial systems. Central bank says Archegos collapse shows it lacks tools to see full extent of risk-taking. This is a article in May. The U.S. Federal Reserve has warned that existing measures of hedge fund leverage, quote, may not be capturing important risks, pointing to the collapse of Archegos Capital as an example of hidden vulnerabilities. Hidden vulnerabilities means that they're doing the same things as 2008, but just with riskier or the same type of risky trading practices and investments. So you're going to have Bernie Sanders and AOC complain on Twitter 1,000 times a day when the market crashes. It will be in large part because of Democratic policies. I'll get to the politics behind it and why Biden and Democrats are almost 100% to blame. Okay? They have focused for the past year and a half, 2 years, and especially since they have the House, Senate, and the presidency, on anything but economic growth. Economic growth has not been what they focused on. And we can get to that later. But here, the U.S. Central Bank's semi-annual report on financial stability found that some asset valuations are, quote, elevated relative to historical norms and, quote, may be vulnerable to significant declines should risk appetite fall. So what that means is when there's a run, or when you have Wall Street finally realize that they're skating on thin ice and that the economy really has already tanked, that the people in power, media, Democratic politicians don't really care about economic growth, don't care about the fact that you still have high unemployment throughout the country, especially the top 10 highest unemployment rates are in the largest Democratic-run states, or in the largest states. So the top 10 highest unemployment rates in this country, according to the Bureau of Labor Statistics, are blue states. Go look it up, including D.C. Top 10. Then you have, like I said, the margin trading, which is at an all-time high. The link is below. Everything I say is below in the description. It's backed up. I'm not making up the fact that margin trading is at an all-time high, or that inflation is at a 13-year high, or that prices have increased faster than in the past 12 years. We had the greatest miss in terms of job numbers. The GDP has been revised downward from, it was supposed to be something along the lines of a 7% increase to just 3%. So you have a whole bunch of problems, but the Fed also acknowledged that regulators lack the tool to monitor the risk-taking of traders like Bill Wang. This is the man who was running Archegos. By one estimate, he and others lost $20 billion in 2 days. Who placed large leverage bets on stocks through his Archegos office. Quote, the Archegos event illustrates the limited visibility into hedge fund exposures and serves as a reminder that available measures of hedge fund leverage may not be capturing important risks, said Fed governor who chairs Central Bank's Committee on Financial Stability. So they're telling the whole planet that the government cannot regulate hedge funds efficiently or appropriately, or they can't prevent another financial collapse. They're going to very likely have to bail out banks. Because the banks and the hedge funds are doing the same thing. They're over-leveraged. So they're borrowing money to buy stocks and engage in these risky trade practices, just like they did in 2008. So the warning about unseen hedge fund risks came as the Fed also expressed concerns that a worsening of the global pandemic could stress the financial system. It's actually the response to it. The response has been designed or created. The response is the brainchild of maniacs who are hysterical and apoplectic and always paranoid. That's all they care about, by the way. They get a Pavlovian response when you say words like pandemic or climate change. But, hedge funds going under that can take down the whole financial system, they won't talk about until it happens, God forbid. And then they'll pretend that they knew all along this would take place, and people like me are talking about it. Not many people are talking about this. So hit subscribe to this channel. The Fed said that banks will remain well capitalized and leverage at broker-dealer. So that's not true. Leverage is very high. Existing measures of hedge fund leverage are somewhat above the historical averages. We have here, I have an article here. Well, here's another fortune. A massive bet on highly secretive derivatives may have sunk Archegos Hedge Fund. So that was the contracts for difference trades. $30 billion margin call. So they had a $30 billion margin. Here are the complex bets at the heart of unprecedented Archegos-linked $30 billion margin call. And of course, you have a whole bunch of other You have a whole bunch of other hedge funds doing the same things. Hit subscribe to this channel right now. The stock market collapse is going to happen, unfortunately. I hope I'm wrong. Save your money. I mean, go out to dinner, but just remember to save your money. Make sure you have 1, 2, 3, 4 months savings at least. And be here tonight for the live stream. We're going to talk about this and other things going on as well. Give me your thoughts below.